Okay, so September 7th. In today's session, we're going to go over the BlackBird template that I've created using standalone indicators, free indicators, so that those of you that don't actually own our software can still get a feel for BlackBird and Bloodhound. What we'll do, rather than going through all of the rules for the entry, we're going to go over just the rules for the BlackBird template, the order management side of it, and then kind of explain how that works. And in a subsequent video that I'll put up on the web page, I'll go over the details of the Bloodhound template for the entry. Okay, so let's start by enabling the strategy, BlackBird. All right, so I just ensure that the chart trader is not on the chart and that I am connected to the replay data. And for this example, I'm using the swing high in crude oil on the 23rd, which occurs around 10 a.m. Central Time. Okay, so now that I can open the strategies window because I'm connected to data and because there is no chart trader on the chart, I can load BlackBird. And I've actually set my default for BlackBird to load this BlackBird template. Okay, but this is the BlackBird template that you're going to load. And you would do that simply by clicking on that ellipsis and then coming over here, clicking open, and then selecting this BlackBird template right here, the TTP BlackBird bonus BB. I made it BB so that you know it's the actual BlackBird template. And then here, what we have is the Bloodhound template that's being used for the entry. So that's right here. And once you load this BlackBird template, it should automatically load the Bloodhound template for the entry there. Okay, so if you haven't moved the files into the correct folders, then this will probably load blank. And if that's the case, then you need to move this file right here, TTP BlackBird bonus, and then BH for Bloodhound in parentheses. You can load that here, file, open, and then it's this one right here. Okay, but that should be loaded for you automatically if you've moved the files into the correct folders to begin with. And then you see we have all of our different entry conditions here. All right, I'm entering 2 long market for the first set, for the A set. For the B set, 2 long market. And then for the C set, 4 long market, which I'm going to take off at 50 ticks, or when the swing low is broken. We'll go over those rules as we play it out here. And then this D set, 2 at market, and then taking those off at 140. And then this E set will be my scale in. So I'm going to take these 4 off at an initial 50 ticks, or if a swing low is broken, and then try to buy those back at the recent swing high if it retraces back to it. Okay, so we'll go over this as we play it out here, but what I want to do first is enable this. And of course, if you're connected to the replay data, you need to make sure the account is set to replay. Otherwise, it will not enable. It won't allow you to enable that. And here, I start it with the auto enabled on, and then backtest mode set to false. Okay, and then of course you want to show the chart trader so that you can control everything. And I hit exit on close, set to false, in case I want to hold the position overnight. And then it's enabled here. And then we just click OK, and everything will pop up here on the right with their kind of advanced chart trader, and then all the BlackBird settings. Okay, so now we have the Bloodhound template up here, you see? So this is the BlackBird layout. There's our order settings. And this is the Bloodhound template that is being used for the entry. So in order to display that properly on the chart, I need to change the logic template to the entry. See where it says no logic selected? So if I select edit, it will open up the Bloodhound user interface. And this is the entry template here. So it's pretty complex. So in another video I'll make after this, I'll explain the details of of the different rules for the entry. But for now, what we'll do is run this forward, let you see it work, and then come back and explain what I've done in BlackBird so that you have a better understanding of how this works and how you can begin to build out your own conditions using BlackBird and Bloodhound. All right, so let's run this thing forward a little bit. So when we come up to the 61.8, basically if we get between the 50 and the 61.8 while meeting a number of other conditions inside of Bloodhound, then we will initiate a short signal if we get a reversal bar. Okay, and then from there, essentially what we're going to do is we're going to enter short 10 contracts and then scale out of 4 once we hit 50 ticks, or if a swing low is broken. You'll see that both of those kind of happen at the same time for this example. Let me just kind of explain what's happening as it happens. All right, so at the close of this bar, we should enter short 10 contracts. And I'm putting all 10 of those stops at just a simple even 20 ticks, and it just happens to coincide with just about the high of that swing. Okay, you can see up above it here, I have a limit order with 4 contracts to sell short limit, but if the stops get taken out, then this order would cancel. And essentially, if these are filled, if these initial 4 contracts to exit with a buy limit to take off 4 of the 10, if those are filled, then that will trigger the condition to tighten these 4 up to the most recent swing high. All right, so you'll kind of understand this as it goes on. What I've done is I've staggered these profit targets here. So we'll take 4 off at 50, try to sell those 4 back. All right, and then if we come down and hit the 70 ticks, once a certain couple of conditions happen, once we break some swing lows, then we'll start trailing these stops behind various different swing highs of different strength. Okay, and then I've connected the main target to 2 ticks below what is the 0% fib. Okay, so if this is the starting point, essentially think of it like this. Let me enable the toolbar up here so we can turn the chart trader off. So this is the starting point for the fibs right here, this little white dot, and then this is the end point back here. Well, if you're drawing them, then it would be the other way around, but this is, black line is 100%, orange line is 78.6, gold is 61.8, and silver is 50. So that would mean that this is 0. So if we're shorting from up here, really we're expecting this low to be taken out because we're looking for another leg down, right? So I have my ultimate profit target to take 2 off at 2 ticks below that swing low right there, which is identified by this auto fib retracement indicator that I have for a free download on my site. And yeah, I sent that to everyone. But it has the BlackBird template, it has the Bloodhound template, and the workspace file. So these 2 will take off at 2. Oh, sorry, we'll take these 2 off at 140 ticks, these 2 at 70 ticks, and these 2 at 50. But here's the thing. So if we didn't come down and hit the 50 tick limit order to take these 4 off, we would bring up the profit target immediately to market price once this swing low is broken. And the, I don't know if you want to call it the theory, but the idea behind this is that once we've identified a swing low after we've entered, then if we have broken this swing low, then chances are we may have an ABC developed, and then the trade is going to fail. Okay, so once that swing low is identified, all right, and I'm putting a delay on there of 30 ticks, and I'll explain that once we get into the BlackBird template. But once this swing low is identified and then broken, we can safely assume that we have 1, 2, 3 swings down, and then we're not guaranteed to keep going down further. We may have put in a corrective low and the trade is going to fail. So what I'm doing is I'm going for that initial 50 ticks. If that doesn't fill, then we're going to take those 4 off immediately when the swing low is broken. Now you might think, oh, well, that, you're going to be exiting a major portion of the trade once a swing low is broken. Well, yeah, because once a swing low is broken, you may be running some stops and then run it back up, or you may be finishing a C-wave correction and then they're going to run it back up, because most of your breakouts will fail. So that's why I'm taking these off. And you'll see it kind of happens at the same time. We're going to fill this 50 and break this swing low all at the same time. So this may not have been the best case. I guess it would have been good to set that maybe to 60 ticks so that you could see it tighten that profit target up immediately to that swing. But you'll see that here momentarily. Let me speed it up a little bit. All right, so here, once we break the low, what's going to happen is, there, you see this? All right, so now, did you see the scale in just pop down to this swing low? All right, so we filled those 50 really before this bar closed. So if we would have had it at, say, 55 or 56, when that bar closed, that 50-tick profit target would have tightened up immediately to market price and then exited. All right. So with the same condition, once this swing low is broken, I'm going to scale in to these 4 at the most recent swing high. And the thought process is behind that, well, if we come back, run these stops, then we have a potential of immediately turning back down and then having the trade work out to its full potential, which would be to break that low right here. And we know that if this condition is met, that we break this swing low, then those 4 would come off anyway, and then tightening up the scale in to the recent swing high is not going to get us into potentially 14 contracts, because we know that those 4 would have come off on a break of that swing low. So now if we come back and we fill those 4 contracts, then it will put in a 20-tick stop from this entry and then a 45-tick profit target. So now we're going to come back, and if we break that swing high, then we'll fill those 4, which we've just done now. And you see the profit target is here at 45 ticks from the entry, and then our stop loss is at an even 20. All right, so now I'm not tightening up my stops until, because I'm trading a 30-minute chart here, right? So I'm not going to start tightening up my stops on a 1-minute chart until I know that we've moved far enough outside of the entry area to begin the descent. And basically, I'm not going to start tightening up those stops until this swing low right here, which is on the 5-minute chart, until that swing low is broken. So once that swing low is broken, then I'll start tightening up these stop loss orders behind these recent swing highs. So let's do this. Let's explain how all of this comes together. All right, so you've just seen that all 10 of those contracts, the 2 here, the 2 here, the 4 here, and the 2 here, were entered initially to sell short the 10 contracts when this Bloodhound entry logic template, when all those conditions were met. All right, these 2 we still have sitting on A. You see we have A here, D here, B here, E here. So A, we set that profit target to the 0% fib right there. You see? So that's set right here. So here we set what type of order we want. In this case, just market. You could set, stop limit, whatever you want. So we've just entered all of these 10 at market, and then the 4 that we use to scale in, we've entered at limit. And if you had a smaller account, you could set these to 1, 1, 2, and 1. Enter 5 contracts. This is just kind of an example to give you an idea as to what Bloodhound and BlackBird are capable of. And I haven't even scratched the surface as far as what other things we could do up in here as far as overriding account performance and money management, risk management rules, and all this sort of stuff. This is just kind of a broad overview. So I'm setting the profit target to an indicator value, and you could set it to price, indicator value, or a swing point value, or even a linear regression channel. All of those are built in. So I've selected indicator value and then brought in this auto fib retracement, and I'm setting that to a value of 810 on the 1-minute chart, because on the 30-minute chart it's set to a period of 26 bars. All right, so 26 times 30 is what, 780, right? And then plus another 30 is 810. So rather than just multiplying that 26 by 30, it doesn't quite turn out correctly on the 1 minute. So I just added another 30-minute period to it, and then it works out perfectly. It's just kind of weird like that. So it's more like multiplying it by 31, the 26, because we're using a 1-minute chart over here on the right, and the indicator I'm trying to access is a 26-bar auto fib retracement from the 30-minute chart. So in order to get those to line up correctly, I'm having to multiply it by 30, because it's a 30-minute chart to a 1-minute chart, but then add another 30-minute period to it for some reason. All right, so that's why it's set to 810 for this auto fib retracement here. And then I'm simply selecting this 0% line to attach my order to. All right, so it's as simple as that. And then I'm offsetting it 2 ticks. So it's going to be below it by 2 ticks, which would mean that it would have to break that low by 2 ticks to fill that order. So it's -2 for a short. So if I'm shorting it, it's going to be below me, and that profit target is going to go in at -2 ticks below that. And then here, I'm not trailing that or doing anything fancy with that, but here with the 70 tick target, I'm initially just setting it to -70 ticks from the entry price for a short, and no trailing whatsoever for this 70 tick target. Okay, they're all going to be essentially fixed profit targets. Okay, the only thing I'm trailing in this case, because I'm attaching these to indicators, these stop loss orders, all right, those are going to be the only things that I'm going to trail in this example, are these stop loss orders. So this one is not going to trail at all, right? We're going to simply keep that one at -20 ticks. Either we get filled once it breaks the swing low, or we get stopped out on this one. I'm not trying to do anything fancy and take risk on or off, scale in or out. All right, I'm going to use these closer profit targets for my scaling in and out to eliminate risk as quickly as I can on the trade, and try to somehow capture a little bit of money if the trade fails. All right, so here, this one is now starting to get a little bit more interesting here. We have a 20 tick initial stop. It's just offset 20 ticks. But for the trail, after we have moved 30 ticks in favor of the trade, this is the initial delay, and you can create all sorts of different delays here. Points, bars, seconds, or none. But this trail is not going to enact It's not going to initialize until after a 30 tick move in favor of the trade. Okay, and if you have to, if you have a different sized account, you can manipulate this to fit whatever. This is not, I'm not giving you this so that you can now take this and start trading automatically with your real money, because that would not be very wise to do with this, because I just created it. It's more of a learning process here. This is a kind of a lesson template, if you will. It's going to take me, quite a while to develop something that is actually going to be profitable and fully automated. Of course, that would be worth hundreds of millions of dollars. So here, we're going to trigger this stop now once this swing is broken. All right, that's this swing low that's on the 5-minute chart. So once that swing low is taken out, then we're going to start trailing these two stop loss orders right here from these two. And I'll make that clear as we come down. But what I'm doing is I'm setting it to 50 to match the 10-period swing highs and lows indicator from the 5-minute chart. So on the 5-minute chart, we have a 10-period swing indicator. So on the 1 minute, I'm using a 50-period. So once this swing low, this bottom swing is broken, then we'll start tightening up that stop. And we're going to tighten up the stop to, see, that's the trigger. Once that swing low is broken, once this, whatever color that is, hot pink or hot purple, once that swing low is broken, we're then going to do an action. So that's our trigger. The swing low is broken. And then our action is to tighten up the stop loss order 2 ticks behind the faster swing indicator, which is going to be the one that we just attached these 4 to scale in at. All right, so essentially, let me just kind of explain what I'm doing here. Once this major swing low is broken on the 5-minute chart, I'm going to take 2 contracts and scale behind the tight, fast-moving swing, and I'm going to take another 2 contracts and scale behind the slower 5-minute swing. And then I'll continue to scale those down every time another major swing low is broken, until either my profit targets are hit or until the stop loss orders are filled. Okay? So that would be for this one. We're going to tighten up this stop loss behind the faster one, the 15-period. Okay? But both of these are going to be triggered on the 5-minute, the 50-period swing low. Once that swing low is broken, the 50-period swing low is broken, we're going to tighten up 2 behind the 15-period, and then the other 2 right here behind the 50-period right here. You see? And we're going to be 2 ticks behind that one. And we're in a short, so 2 ticks above it. All right, so that's how it works. So back here to this one again, we'll just run right through these. So for these 4, we would tighten those up. Sorry, these right here. Right here, number 2. We're going to tighten those up behind that 15-period swing right there. And see, I could select whatever. I could select price, indicator value, swing point prices. So I'm selecting swing point prices, 15-period swing. So for the short, we're going to tighten it up 2 ticks above the most recent swing high at the top. Okay, and we're going to repeat that right here indefinitely, but only when re-triggered. So it's going to attach it to that swing high value, but it's not going to move it. It's not going to update it with a change in the swing high until that larger 50-period swing low, the bottom, is broken again. Once price, see short mode, Once price is below, always think in terms of long and short. Once price for a short, we're in a short. Once price is below for a short, the swing low, the bottom, 50 period, which is this hot pink line or whatever it is, then it will tighten up the stop behind this 50 period swing here, which is set. No, in this case, the faster swing, the 15 period swing. Okay, and then it's this one that will tighten up behind the 50 period. Right there. I know it's a little bit confusing, but once you start working with it, creating your own conditions, it'll start to make sense. It'll get easier and easier for you. And then this one, once we scale back in, we're just going to lock that one in at 20 ticks and then exit it at an even 45. So I didn't want to make it, you know, way too complex for you so that you would have a lot of trouble with this. I wanted to make it, you know, fairly complex, but not overly so, and then still show you how to scale in and scale out, which might take you quite a while to figure out on your own. So at least you'll have, you know, a pretty good explanation as to this main area, because this is the crux of BlackBird, is right here. How you're going to enter and why, how you're going to take your profit and why, and then how you're going to trail your stops and what will trigger those trails. All right, so we're still in this trade, and once we take out this swing low, we'll start to tighten our stops up here. Let's speed it up a little bit here, because this one will be held overnight. Okay, so here we go. We're about to fill those other 4 that we scaled into. And there we go. So now we're down to 6. Okay, but did you see what happened back here? I forgot to mention it. Once we actually closed below that line, which might have been right here, I think it probably was more like right here on that little tick. Once we actually closed below that line there, let me see what color I actually made that. Medium violet red. So once it closed below that violet red line, then we started trailing our stops, and you can see where both of them are right now. Both of them are at the same price, but why? Well, we've got 2 different swing indicators here, and they happen to be lining up at the moment. This one is set to 15. See, swing sensitivity of 15. And then the fatter one, which is from the 5-minute chart over here, is set to 50. All right, so as they start to diverge a little bit, and then once we break a swing low again, then they'll start to tighten up with their respective swing highs. So let's keep playing this forward here. We should have everything for Ninja 8 by the end of the year, Dave. The toolbar is the next main update, which should be ready by the end of the month for sure. And then once that is done, once that is done, then the relative volume. All right, so it's closed at the moment. We're going to pass through that here now. All right, so now we're about to fill the 70 ticks. Okay, so now we've put in a swing low, you see? Now we've put in a new swing low on the 5-minute chart. So if we take that out, then we'll start trailing those stops behind the recent swing highs. So let's see. All right, now we have a new swing high here. All right, but we're not going to, we're not going to attach our stop loss orders to that until we're sure that we're far enough away from it. And that's the problem with updating without having triggers. So that's why our BlackBird is so incredibly powerful, because you tell it when to, move those stop loss and trail them based on whatever set of conditions you want. So that's kind of been the discretion to order management that has yet to be able to be programmed. So now we can program that. So here, once we actually get a close below it, you can see every one of those bars kind of closed right on the line. Once we get a close below it, we'll start tightening those orders up. So one should come to about right here. The other one should come to about right here. Okay, there we go. Well, you just saw the one tighten up to here, but then it got filled immediately. So they both came down about the same time. Once we broke below it, one tightened up to right here. And then now the only one that's left is behind the 5-minute swing. So now it's either we get filled at our targets or we get stopped out. But we have a stop profit here on the 5-minute chart from the 5-minute swing here at 73. So if we somehow make a new swing low and then start working our way back up, once we break that swing low again, then the stop loss will tighten up behind that. And there's another trade similar to this one that sets up, what I think it was on the 30th, that turned into a massive winner as well. And then another one that's about break even, and another one where you lose a little bit. So this entry could probably be made into something rather useful. Okay, so now we have a new swing low, you see? We have a new swing low on the 5-minute chart right here. So if we break that swing low, the stop loss will now tighten up to right here at 47.37. So let's see. Well, now we have a new swing low. So if we take that swing low out, then we'll tighten up to 47.39. But not until we break down. All right, now a new swing high is found. See, now it's behind this recent swing high because we've just broken down. So now we've tightened up a little bit more. Okay, so now we just got stopped on those. All right, so now the only thing we have left is our full profit target down here. So either we're going to take a 20-tick stop on that, or we're going to fill it. But I can also tighten this thing up manually. And it will continue to tie these orders together. So, especially for swing trading, you're not limited by what you've programmed in BlackBird. You can still tighten these up. So that's one really good thing about it. I mean, picturing how I would use this, I would have my basic conditions for profit saving, kind of trying to maximize the reward potential, and while, meanwhile, trying to save myself from losing too much on the trade. But then once certain things happen based on, other discretionary things that I may not have thought about when I design the template, or just things that I see from drawing out my market geometry or market structure, Elliott wave, whatever, I can then tighten my stops up behind whatever areas I think, would be key areas that I would think the trade has failed if they were broken. So I could even tighten this thing on up. I can move this profit target here, and it will still be attached to that stop. So I'll continue to leave it where it's at, but tighten that stop up. So you see? So that's how it works. And you can design really just about any set of rules you can think of for, updating your profit targets based on whatever indicator values or even Bloodhound templates, whatever set of conditions you create in Bloodhound. You can create some pretty extensive trailing stops. I could even allow that stop to move back against the trade. So I don't necessarily have to trail in favor of the trade. I could then update based on some, set of conditions where then I want to kind of remove that stop from being so tight to the trade, give it a little bit more room if, I feel like it's trying to make a deeper correction and I want to allow the trade to kind of work itself out while not getting stopped out, but still, not have it so far away that I would give every bit of the profit back. So you could design, all sorts of different things once you put in a swing low, and once I get this ABC indicator fixed, if we're starting a C wave, maybe I want to move my last stop loss up above the 78.6 retracement so that it would allow making that 78.6 retracement. And then if we take out the swing low after that, then start tightening up the trailing stop again, stuff like that. So a number of different ways you can use this to really program out just about any aspect of the order management or entry side now that we can access all of those market geometry lines with the toolbar. So pretty endless what you can do. And this is just barely scratching the surface here. So Tony is asking, when you manually move your stop to tighten it, does BlackBird still keep up with its position and know what to do? No. So once you have moved the stop, it's not going to reenact the trail. All right. Once you've manually moved that order set, anything that you've programmed that order set to do has been canceled. All right. But it's still going to tie to that profit target. So if one is filled, it's still going to be an OCO order. That doesn't change. But any of the trail conditions for that order will be nullified. The trail conditions for the target would not be nullified, but in this case, I didn't have any trail conditions. Yeah, it doesn't cancel everything for the entire order set. It would just cancel whatever trails you have written out for that specific order, which would be half of the order set. The order set would contain both the profit and the stop loss if you've designed both of those. You may not even add a profit target for some of them. You may want to trail the stop all the way down until it's taken out. That doesn't test very well. If you were consistently giving back a large portion of your total earnings on the trade, then your exit efficiency is pretty horrible. And that's one of your more important numbers would be your exit efficiency. So you want to, you want to use profit targets, but you want to use them wisely. You wouldn't want to consistently be trading, a reversal on a 30-minute chart, but then exiting once the first swing low is broken on the 1 minute. Because the full potential of that trade would be relative to the size of the chart that you're trading. So if I'm looking at this as the first wave down on the 30-minute chart, and then this is the first correction, well, then I'm expecting this low to be broken, at a minimum. So my profit targets need to be designed based upon the chart that I'm trading. You may want to, create some different rules for locking in profit and not allowing yourself to give back too much. But if you'll consistently take targets at areas based upon the chart that you're trading from, then your exit efficiency will gradually get better and better, and your account should show it. And then you should start getting higher and higher profit factors, which is really what you're all, that's what you're after, is your profit factor and your expectancy. You want to consistently be making twice what you're losing or better. So if you can do that consistently, you can make money. You just want to always ensure that you're making more than you're losing, obviously, but your expectancy, you need that to be trading like we're trading. I would say at least 7 ticks a trade, at least, and that would be more like, you're consistently losing 10 ticks a trade, but making upwards of 17 or 20. That's at a minimum, though. I mean, typically your expectancy for trading like I'm trading would be 27 or, up as high as 40 ticks per trade, where you're consistently losing 10 or 16, but you're making upwards of 40 or 50, Yeah, on average, you want to get better than 2.5 to 1. I mean, some of the trades that I'll take, you'll see 15 or 20 to 1 occasionally, quite often upwards of 6 to 1, 7 to 1. But then it averages out with your losers, and then, you come out to about 3 or 4 to 1, which is exceptional. But that's really what it's all about. Getting that reward up as high as possible while keeping yourself from losing too much. And you really don't have to win that often to consistently make money. You may not make money every week, but you should make money every month. If you're taking, say 6 to 8 trades per week, maybe as high as 10 or 15, but if you're taking 20 trades a day, you can just forget it. Forget it right now. As far as having great numbers. I mean, I'm sure there's people out there that scalp and make money, but I don't like to trade like that. It's too stressful. Stressful enough as it is. And then you should be able to get in here and start figuring this thing out. I mean, the best way that I found to learn this was just start clicking on buttons and see, what comes up. I'm a little bit, I guess I'm already familiar enough with Bloodhound to where this is kind of second nature, because it's all set up in both long and short at the same time. It always is in Bloodhound. I mean, you always have, your long and your short. So you're always thinking in terms of both long and short at the same time, which is different from coding. But, you don't have to be a programmer to understand how this stuff works. I mean, it's very easy to define what your profit targets you want, what you want them to be. If you want to attach them to an indicator, you simply say custom movement. Do I need an initial delay? Like, how long do I want to wait before I start trailing? Do I want that to be in ticks and direction? Or, if it's against the direction, well, then maybe I want to tighten that profit target up on some of these and just go ahead and get out. Seconds, bars, blah, 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 whatever. And then how am I going to trigger that stop loss trail or profit target trail? Is it going to be a set of conditions I programmed in Bloodhound? Is it going to be a specific indicator value, or is it going to be price versus an indicator? So do I want to start the trail once a moving average is broken, once price has crossed a swing, high or low, once I get 10 ticks per trade or per contract, or, once it moves a certain number of ATRs past my entry, average, the average size of the bar. And then once it does trigger, what do I want it to do? If it's, if my trigger has happened, then what do I want that trailing target or trailing stop loss order to actually do? And then, I can imagine spending days working on stuff like this, because this is really the kind of stuff I love to do. So you guys can do the same if you spend enough time getting familiar with this. I know a lot of us don't have very much time as it is, but I would say a solid weekend, 1 or 2 weekends, you should have a pretty good understanding as far as how to add profit targets and stop losses. And then you can just kind of take it from there. Go back and look at some of your trades, how you should have managed them, you know, what you would have wanted to do for that trade. Do that for 20 or 30 trades and then see what kind of comes out as a recurring set of conditions for your trades, and then program that out and then go back and test it. So it's pretty cool being able to do this stuff now. I mean, this is obviously an industry first, but it's probably the most exciting thing I've ever seen. It's pretty incredible. So, all right, with that, I'm going to end this here and then come back and finish cranking out the details of the entry and put all the files up on that page, and then we'll email you guys out. I'm leaving tomorrow for Belize, so I won't be back until next Wednesday. I'm going diving for a little while and just take a break, chill out for a little bit. And then when I get back, we'll start up again, and you guys will have the rest of your time in the room. I have extended all of your subscriptions for those of you that are subscribed. I extended your subscriptions out, so we should be all good. And I'll send you a link once everything is up on that web page, and then you guys can download all this, and if you haven't already, and then kind of make your way through the videos and start making changes and see, you know, how it works. Pretty cool stuff. So, all right, guys, everybody have a great week and weekend, and I'll talk to you all again on next Thursday.